Hello, this is Riz here. In this video, I want to talk to you about Bed Bath & Beyond. It's gone completely parabolic over the last 16 days. We have looking at here at a chart. I'm not going to do too much technical analysis or anything like that because all that goes out the window when we have crazy retail and institutional driven squeeze and pump here that we've seen. And this is obviously very reminiscent to 2021. Meme stock frenzy that we saw with GameStop and AMC and a few others. So this is kind of like, GameStop 2.0 2022 edition, but instead of GameStop this time, it's with Bed Bath & Beyond. And what's happened is, I'm going to measure it here for you, in about 16 days, so August 1st, the price was, let's just stay around 550. Okay, it's a rough estimate here, and it's gone up to today's close about 275%. Actually, higher if you look at today's high, but just based on today's close, approximately 275% in 16 days. All right, not even 16 trading days. So, what does this mean? Does this mean that you go and buy this thing and hope it goes higher? Well, I think that's a sucker's play. I think that's for people that are fanatics and who really buy into the whole get rich quick type of thing. But for those of us that are smarter, who have the capital, the risk tolerance, and want to use a couple different strategies to be able to make money in the long run at the expense of people that are just aping into this and not really using proper risk management or not really using proper trading etiquette, well, we're here to capitalize on that. And I think this is one of the greatest opportunities that we've seen to do that, and I'm here to take advantage of that. So without further ado, let's break it down. The stock is at about 20.65 at the close. It's actually a little bit higher in after hours, about $22.50 in after hours. So right around here. I will also say, full disclosure, that I do have I'm going to mark it here for you about a short here about $22 is my cost, my break even here. All right, $22 to give you an idea. I'm short. And in fact, I will show you, here's my trading platform, the Interactive Brokers trading platform. You can see the stock price, closed just around $22.50, even in after hours, up about 40% for the day. Bed Bath & Beyond, this is the options chain here. And if this is looking like rocket science to you, well, I'm not going to go in and break it all down for you, but I will kind of touch and go through my strategy, the way I'm playing this. And if you've been around, follow me for some time, you know that I'm not a big fan of these kinds of crazy hype moves, stocks that have gone up 200, 300, 400% in a span of a couple of weeks. It's not sustainable, and we've seen this play out. We know it's not sustainable because 2021, everyone that thought, AMC was going to go to $3,000, right? And GameStop was going to go to like, 1,000 or something before the split. It's crazy. We've seen how that's played out. Right. So here's what I've done. I've taken a starter short position of 500 shares in Bed Bath & Beyond. Fair warning to those that are, big fans of Wall Street Bets and all the other subreddits that, really ape into these kind of stocks and call themselves smooth-brained individuals and are there to diamond hand and stick it to the hedge funds. Well, I'm not really on board with that movement, for better or worse. So what I've done is I've decided to bet against Bed Bath & Beyond. By no means, it's not a large position. It's only approximately $11,000. But I do have 500 shares short. So my cost being around $22, I took this short with the ability to add more. Now, I will say, I'm completely aware. To those of you thinking, well, Riz, you're stupid. This thing could go to 40, you could go to 50, and to that I say, yes, I am aware. Hence why I only have 500 shares short. I'm well very well able to add more. I have a lot more in reserve if I need to as it goes up to bring the average cost basis higher on this short. And enough capital and time and patience along with conviction in my thesis, to make money on this as this trade runs its course, which eventually will. Like all these, hype meme stocks, they eventually do fizzle out. Some take a little bit longer, some less long. So when I have this 500 shares short, and it could very well be higher, if it does rally further, I'm not done. I haven't just shorted and called it a day. I can make money by betting against the stock and stock going down. But another way I can make money is via options. Now you're probably thinking, well, Riz, why don't you just buy puts? Or for those of you, that love Bed Bath & Beyond, why don't they just buy calls? And to that I say that's like literally, taking your money, lighting on fire, and not even having the chance to use it for heat or warmth. And that's because a simple thing called implied volatility. And that is represented by this percentage here in the options chain. This is the Bed Bath & Beyond call side. This is the put side, all right? And the implied volatility you'll see for each of these contracts is around 400%. 400%. That is ludicrous. And that similar thing happened with GameStop, where the implied volatility is so high, it jacks up the premium per each contract. But as a result, you then need a much larger move to be able to break even. So in this case, this was the highest strike on the call side for Bed Bath & Beyond, about, $4.15 is the mid for the 26 call. If someone were to buy this call for $4.15, options market's closed right now, but assuming they got in at $4.15, they would need the stock price to go to approximately $30 a share just to break even. And it would need to do that fast. Why? Because they're losing 32 cents on this contract each and every day because of theta. Theta and decay is so high. This is about 10 days out, right? And they could go further out ultimately. And I'm not here to, go into the minute details, but ultimately 32 cents, right? So we know options are 100, represent 100 shares. So this is $415 mid for a $26 call. And out of that, every single day, they're losing $32 in value, even if the stock stays flat. It does not move at all. If it goes down, well, it's going to be even more painful, right? So this is the problem with buying options on either side, calls or puts. And this applies to puts too, betting against it via put options. Same thing. The premium is so high, it just doesn't make any sense because you need that much larger of a move to just even break even. And that too, it needs to happen so fast or you're just going to get clobbered by DK. And if this sounds like, mumbo jumbo to you, well then you got to take the options trading masterclass to really figure out and understand what we're doing here. And of course with Elite. But beyond that, I have the $500 share short, approximate break even 22. So what have I done? I am looking to short the puts. So that means I'm writing or short selling the puts. I'm collecting the premium. Instead of buying and paying the premium, I'm shorting it. So I'm collecting premium. Why? Because decay is on my side when you short a contract. And the implied volatility being as high as it is, as the implied volatility goes down, that too will benefit me. So, there's multiple positives to shorting options contracts when the implied volatility is so high. This is not normal, right? This happened last year as well in AMC and GameStop and so on and so forth. And it's happened now in Bed Bath & Beyond. So what I'm considering doing is shorting the $15 puts, okay, at let's say $1.85 each, for example, all right? Again, options markets are closed. So I will collect $185 per contract, okay, in premium. And that says that if the stock price goes to or below $15 per share, all right, my short shares will be bought back. at 15. So I'll make $7 per share plus $1.85, let's say, in premium collected per share. All right. So because I have 500 shares, I can short 5 of these. I can write 5 of these contracts. That's going to be roughly $900 in premium collected, and that's 10 days out. If you do the math, that comes out to, again, even if the stock does not go below $15 in 10 days, maybe it stays around $20, $18 range. The option, the $15 put, will expire worthless, and I'll keep all the premium. All right, and I'll still have the 500 shares short. All right, that will represent approximately 200 and something percent annualized return. All right, easily. All right, I'm being conservative there. Just off of collecting the premium. That's annualized, right? So this short only represents about $11,000. Small, tiny, not a big deal. Hence, you don't want to take large size on these kinds of plays, either direction. And I have the capability of adding more. Maybe add another 500 shares. It'll be 1,000, so I can write more contracts, right? So instead of making $900, I can make $1,800 in premium collected. If it stays above, no harm, no foul. I still have my shares short. Plus, I just made $1,800. If I did 10 contracts. If it goes to 15 or below, my shares will be gone. They'll be assigned. They'll be taken away. So it'll be bought back at the strike at $15. So not only do I still keep the premium, I also made the profit in the spread. So if I short at 22, I made $7 per share plus the premium collected. So you can see how lucrative this can be. And instead of just shorting and praying, you're generating income. If it goes lower to your strike, fantastic. If it doesn't, no harm, no foul. You still collect the premium. You get to do it again, right? I might just do a September 2nd one, right? So that's the beauty of having the ability to short this, have the shares, not go overextend yourself, leave some reserve in the tank, make sure you're not going to get, margin called or you're too heavy or too much risk. Make sure you're not doing any of those crazy things and have the ability to stay it up, and let the apes and the hype and all the pumpers just kind of fizzle out, right? So time is on your side when you do this. Now, for those of you that can't, short outright, well, then the only choice you have is to construct, different options contracts. So you could do credit spreads or debit spreads, and I'm not gonna get too into the weeds of it. But one of the things you could do to bypass paying such a high, premium is you could do, if you want to bet against it, you could do a debit spread, right? You could short, you could buy a put and then you short a lower put. So you end up paying money, but at least it's not as expensive, all right? And I'm not going to go and construct the trade now, but that's something to consider. For those of you that are familiar with spreads, you could do a vertical spread on the call or put side, especially if you're long or if you're bullish, you could do it on the call side as well. So that's one way. Another way is for you to effectively, buy a put, and then that will essentially mean that, you're controlling 100 shares, right? That's going to cost you $645, but you can then do a short, effectively trying to generate premium on that. It has to be in the money though. It has to be an in the money put, right? So maybe you spend $1,000 in buying this contract, then you pretty much start writing further down below short puts. Maybe you don't even have to go this far. I'm being more aggressive. Maybe you can do 18, all right? And that will allow you, essentially you'll have, controlling 100 shares without being short, right? So that's one way to consider it. But the best way I feel, for those of you that have the risk tolerance in the capital, is to short the shares. Again, this is not a very high dollar price stock, so you can take 100 shares even, All right. And that'll be $2,200 if you short it at 22, let's say. And you'll be able to then, depending how aggressive you want to go at it, you can just short a $20 put. You'll make 475, let's say, for that one contract just in premium collected. And 10 days, if it goes to 20, great. Or lower, you'll be out at 20. You'll make $2 per share plus the $4.75, right? So that's about $6.75 per share, and that's $675 easy on a $2,200 short. That's a tremendous rate of return, right? So that's the way you want to go about thinking of this. You don't want to just be completely, long or short singularly. You can if you don't have access to options or are completely unfamiliar with them. But other than that, utilizing options alongside having a position in the stock, in this case short, helps you generate income, have a higher rate of return, and give you a lot more flexibility and staying power in the trade. All right. So hopefully this gives you some insights, a little bit of, thought process behind why I've taken this trade and why it's not too large, but I have the ability to go larger, and kind of the pros and cons of this, right? The pros is I can stick it out, I can generate income. The cons is that it's a risky trade. This could, double. If it doubles, well then, I'm losing 100% on paper, not realized, but I'd be down, 100%, because as we know, when you short a stock, there's theoretically infinite risk there. So be aware of that. Do not take this kind of short position if you're not okay losing not just the entire amount, but more than that. And that's why I say, if you're not okay losing double the amount that you put in, be very careful, because I'm not saying it's going to double. It could not, but we just at least need to have that margin of safety there. From a fundamental standpoint, this stock is very overvalued, way beyond overvalued. It now has about a 1.65 billion market cap, an insane amount of volume. And you could see they've missed earnings time and time again, right? So this isn't the best of the best. This isn't the most amazing company out there that they're pulling a squeeze and a pump on, right? So this is a failed kind of retailer, really, frankly. It's a failed retailer with declining sales, declining earnings. Earnings are negative, meaning they don't make any money. You could see their income going down. You can see their revenues decreasing. You can see their profit margins decreasing. It's a negative profit margin business, meaning they don't make any money anytime they sell. The technicals, this is just bogus. Don't bother with that. But yeah, Bed Bath & Beyond, just a quick breakdown here for you, a little bit of insights on how to play this. Hopefully you can short it. Hopefully you do have access to options and are able to do, short on the stock along with short puts if suitable for you. All right, let me know in the comments below if you like this kind of video. It's more of a technical video. Again, it's probably going to trigger a lot of people who are diamond handers and all in on this and wanted to try and make a lot of money off of this lottery machine, pretty much what it is. And I'm probably going to get a lot of angry DMs and messages, but hey, it is what it is, right? So yeah, please let me know what you think of the video, what your thoughts are. Are you buying, Bed Bath & Beyond? Are you short? And don't forget, please like and subscribe. Speak soon. Ciao.